All right, how's it going, traders? Richard here, and welcome to the Ninjacators morning bell. All right, already end of the week. Not much happening here on the economic calendar. We've seen the markets move a little bit lower yesterday and the day prior. We've seen a bounce in the indices, the ES and NQ, from those support zones that we identified previously. We'll have a look at that just in a moment. Yeah, nothing much happening for the rest of the day on the economic calendar for the US. So let's quickly dive into the charts. Before I do that, I have to apologize for the drop in connectivity that I had on Wednesday. Somehow that messed around with the stream to YouTube. And as soon as I watched the video directly afterwards, the recording, it seemed to be, missing like 15 minutes. I think the first 15 minutes. And then the day after, it was all day. So YouTube must have captured it somehow anyway. So it's been uploaded on the YouTube channel. Again, if you miss any of these sessions, the live sessions, then you're more than welcome to go have a look at the recording, which is normally available a few minutes after the live session. All right, guys, let's jump straight into things. Let's quickly first have a look at the bigger picture again for the ES. Bit of a clearer chart, not so much clutter. Still thinking that we're potentially bouncing higher here in a B wave of a secondary ABC. ABC for the first one and potentially another ABC. That's still my thinking. Yes, it's been a pretty strong rally. Just remind you that all previous rallies like this ended abruptly and seen very strong reversals to the downside. Obviously, we're sitting right here at a resistance level. I'll show you that now on the chart with the black background, but again, in the overall picture, I still think there is a chance that we could head higher, lower again on both the ES and the NQ, then to potentially later, maybe this year, maybe first quarter of next year, to potentially end in a Y wave and then see a continuation. Still treating this entire decline that started in Jan as a potential massive correction. Maybe I shouldn't say massive. We haven't even seen, or the ES hasn't even retraced to the 50% or 61.8% just yet. So not really that a deep retracement, yeah? Right, so that is the look on the bigger picture. If we zoom into a daily, we got some more lines on here, so bear with me. We've been tracking this entire decline using a shift pitchfork. Something I like using when I think I'm dealing with a corrective move. And we've seen previously in June, price reached this lower red warning line and also an area of a center median line, which is this long-term pitchfork over here, confluence area. Strong bounce up, move straight back into an area we identified beforehand, and again reached this lower red warning line second time around, and that resulted in the strong bounce to the upside. Now obviously it wasn't the market geometry that made this all happen, but there are underlying symmetries in the market and our price tends to behave, which is what I try to identify or expose here, and then use that to make these sort of projections that I've been working with for many years now. In any case, we've had this resistance area at a 61.8 retracement from this high in August this year till this low in almost mid-October, and price reacted lower. Now Wednesday I said that potential support could step in around 3,922 on the lower end to 3,937 and 3/4 on the upper end, and basically that is just these previous highs as well as this median line running to the downside. Now price reached it, tested it, moved a little bit lower yesterday and pulled back quite nicely back to the upside. So this begs a question. I've been saying this, I think when was this? The 15th. That price hasn't reached this median line on the top here like it has previously. So there's potentially still a chance that it would happen, and that this potentially was just a corrective move to the downside. A very small correction to the downside against a potential larger correction. Remember, I'm still seeing this as a secondary B wave before price could potentially move lower again. So this must have been some potential leading diagonal for an A wave. If it is a correction, I won't say must. That's the wrong word to use, yeah. potentially an A. Strong decline in the B. Found support again at that center median line of long pitchfork. And now potentially we heading higher again to potentially complete a C wave and then perhaps get a stronger move or one more last leg to the downside. I'm going to stick with this interpretation for quite some time. The overall projections have been working really well for quite some time. I think the only time I'm really going to start changing my mind and potentially have to consider that a low for this year or this entire correction already ended here on the 13th of October. If price were to break this high that was set on the 16th of August, still far away to go. So while price remains below that low or that high, sorry, I'm still thinking that there's more bearish potential on the cards for the ES and the NQ as well, obviously. So that's my thinking. Even this little nice move that we've seen to the upside looks like a 5-wave move. 1, 2, 3, 4. Potentially found support now in that area that I've mentioned. Potentially make another high to pip this high and then finally reach that median line. Maybe. Obviously, that's just my thinking. If you see a 5-wave sequence like that, then be careful. That might be the end of that entire move. It might be higher than this area over here. It might get overshot like it did a little bit before, previously on the, when was it, 13th of September, and then see price hit lower. Anyway, long story short, I'm seeing this as a relief rally within a larger bearish correction that is still not over in my view. Until such time that price breaks this high, I'm still bearish on the ES and the NQ. Alright, quickly, support, same sort of area I talked about on Wednesday, 3,920, 3,937, let's call 3,940. But with this nice strong move we're seeing currently upwards today, if that is sustained, then I think this low, this high that was set on the 15th could potentially be broken. And again, let me just get that level. Currently above current price, we're looking around about 4,069, let's call it 4,070, where we have that median line which acted as strong resistance previously. And then we could potentially see a 5-wave sequence in there. And quite often if you see a 5-wave sequence into an area of market geometry, that could be potential danger signs that we might see a reversal. Okay, let's switch over to the NQ. Again, guys, if you've got any questions, let me know there in the chat box. I'll be more than happy to answer that for you, or them for you. All right, NQ. NQ's got a lot of resistance to the upside, a bit more than the ES has had. And we can see how many times it's actually struggled at these resistance areas, like once. And we had the support area bounce from it, back into resistance, back into the same support area. Then I think this was on the 3rd occasion that price now broke above this resistance area, which is what? Lower end 11,500-ish, upper end 11,700-ish, 720, whatever you want to call it. We had this area of resistance, which was just another confluence area between a downward sloping median line and an upward sloping median line taken from different angles, different pivot points in the past. Again, a confluence zone, reversal lower, back into that same zone and bouncing now higher again. So some of the thing I'm seeing here on the NQ, potentially seeing a 1, a 2, a 3, a 4, a 5 of a potential C wave, where this was potentially a leading diagonal for an A. It was potentially a B, failed to break that low, and potentially still heading higher. Alright, the only thing here on the NQ is above this high that was set on the 15th, there's not much in the way of resistance from a market geometry perspective. So it could potentially be that we just see a little overshooted test and then a reversal, if that is the case. And I didn't say that's on the ES, but where the price is going to make it high on the ES to break the 15th high, or on the NQ and break that high, or not, whether it happens or not, another move below these recent lows, I would say yesterday, and that support zone on the ES and the NQ now. If that gets broken, then I think that would strengthen the idea that a correction has ended and that the next leg lower has started. So quite a bit of a tight range between this lower range and this upper range. And you can see since the 11th that although price fluctuated, it fluctuated up and down. Very clear to see, right? So it's not really gone anywhere. So a bit range bound, although quite of a large range, to be honest. So yeah, I think if the NQ moves into at least this high, it was set on the 16th, it's got a decent chance to then break the higher set on the 15th. And like I said, it does look like both the ES and NQ wants to rally today. So let's see how these indices close, or where they close by the end of today, and then we'll recap them again on Monday as always. Alright, let's go and look at crude oil. And you probably noticed that I've switched to the January contract already. Can't believe it. I mean, it's almost the end of the year. January 23rd's contract. Let me just get out that white background chart for you. I still haven't done this pattern. But we were looking at potential support at this channel line, and it's now being broken. This is on a weekly time frame, so it looks like a very, very strong downwards move, right? For a weekly, that is. It's quite a long range for the ES crude oil. So we'll look now at the black chart as well, but potentially could be heading lower to test these lows. We'll set on what week ending 30th September, end of September. This is a weekly chart again. Yeah. So that might be it. Look, it's just even moving even stronger to the downside. So that's this line, median line, or sorry, not median line, channel line, this lower one. You know, these channel lines have been working really well, support resistance all the way to the upside since price went negative in April 2020. I think it should price break below, and I would even go as far as saying that the maximum excursion this could take to potentially still find support. I shouldn't be doing that. Let's get rid of the, let's run a line. Let's do that over again. Apologize. If you run a line or array, the same angle as those channels, and now it's not there anymore. There we go. And you bring it to this area, price previously undershot that line, then it's sort of right at there at the moment, around 79. That doesn't hold, and let's say we see crude oil close below this line, because before I've said many times, it's not uncommon to see an overshoot or undershoot of a market geometry line, and then quite often you see a same measure move as a occurrence previously where there was an undershot like this, for example, week ending September. So yeah, remember I was saying in the bigger picture that this looked like a 5-wave move into an area we had a bounce, and was thinking that we're going to get an ABC or some sort of correction to the upside. We did get that, but kind of failed to move a bit higher than I was hoping it would. So I didn't retrace as much of this decline to the downside, just making it to about a 38.2. So yeah, unless crude oil finds support at that line like I've shown you now, if it closes below there on this weekly candle, there, I think this low around about, what is it, 74, 72 could be reached. Also have this lower median line of that green pitchfork that's been tracking this downward move. In the bigger picture, I think, like I said, if this blue line gets broken to the downside, I think crude oil's got far more distance to the downside to go in the bigger picture scheme of things. All right, let's get to the black chart again. Around about end of September, we've had this 5-wave sequence into an area that we identified beforehand, where there was a confluence between that lower channel line and also a lower median line of that green pitchfork. We've seen a bounce up, reach the center median line, or center channel line, sorry, of the same blue channel. We had a move lower. We had this little area where we thought support might step in. It did work. It just broke above these highs, and subsequently, and I should now move those, they've moved. Let me just get that right. I like to be pretty perfect with the analysis. We had this sort of 5-1-2 very zigzaggy sequence to the upside. It failed to reach an area where we had confluence again. Although price did, and it technically could have just been the end of a correction, because it technically it did break this high over here. Made a slight higher high, tested, and reversed strongly lower. And as you can see, this is sort of at the last area for support, and I was doing this earlier today, and we can already see it's moving strongly below there. Currently, we're seeing a retracement below 61.8, 78.6, not far below there, almost right at it at the moment. So it does look like we might be edging, or crude oil might be edging towards these lows that were set on the end of September. So this definitely didn't hold a support. Even the support areas over here held for a little while and then broke to the downside. And this is quite often what we look at. If you see a support area, you see a reaction from it, you can plan trades and targets. If those areas get broken, then you quite often see a move to one of the opposite side of these market geometry lines, which is exactly what we've been seeing over here. So yeah, we might be seeing a move back to 76.28. Again, we'll have to review crude oil on Monday, but look, it's looking very, very weak. Quite a strong decline that we've seen yesterday. All right, and that brings me to gold. Let's look at the overall picture in gold, and then conclude things with the dollar index as usual. Right, gold. Saying for the longest time that treating this entire very messy, very frustrating up and down movement as potentially just an ABC corrective, and more particularly a expanded flat where you have a 3-wave sequence, 3-wave sequence, and a 5-wave sequence to the downside. Now, we thought that this last 5th wave, this wave over here, of that final C wave, was potentially tracing out as an ending diagonal. But quite often when you have an ending diagonal, let me just draw that out for you. Let's say something like this, right? In a bearish ending diagonal, you'll see price do something like that, right? Then you'll have this 5-wave behavior. 1, 2, 3, 4, and very often you'll see a break. That doesn't have to always be on a 5th wave, and then you see the end of that ending diagonal. Now, in this case, we had price doing that on the potential 5th wave. Also, right at a 61.8 retracement level from these lows that was set in, what was this, July 2018. To obviously that all-time high on the 7th of August 2020. Tested it once, twice, 3 times, broke to the upside. So I'm still going to stick with the ending diagonal idea, although this last little final move to the downside, this one over here, it's a little bit shallow, but it is what it is. I did say that if we do see a break above that trend line, I start thinking that it was potentially the end of a very long-term corrective move, and that we might see gold head up much higher. That being said, the line in the sand for me is right at these highs, where lower highs during this previous decline formed. Oh, now it's obviously on a white background with a white label, but plus minus at around about 1820. Price breaks above there, then I'll consider this to be the end of a corrective move. You can see price also now really nicely moved back into one of these median lines, the dash median lines, and it's reacting to the downside. That's the bigger picture view. Obviously, we've identified that potential resistance zone. I think it was on Monday already. Seen a strong move into it. We had a resistance zone around 1787 to 1700, let's call it 1800. right into beautifully tagging that green dashed median line, and now we're seeing a slight decline. Now I've got a larger bearish sort of point of view. I'll discuss that on Monday, but I'm not going to entertain that idea unless we see some real, let's say, dump in gold appearing. So for the moment, I'm sticking with the potential idea that, that's the wrong word to use, that C wave of a very large expanded flat potentially ended already. And this might be the first wave higher of much higher prices to come. Okay, so if we now can get a correction that moves deeper, obviously if price continues higher, that's going to be even more bullish. But let's say we get a correction. Let's say to 50 or 61.8, maybe back to this median line. Then we can use market geometry again to track such a correction. Identify an area, maybe confluence between a Fibonacci retracement, confluence between a longer term median line, and then a shorter term pitchfork crossing a potential downturn, tracking a potential downturn in gold. Identify a potential area where support might step in, and if it does, we see some sort of reversal potentially on the daily. Then this might just have been first wave, second wave, with one hell of a much stronger third wave to come. Alright, so, but still, I'm also a bit on the fence until price breaks above this previous high around 1824. We could still be bearish, but it's been one hell of a strong move to the upside. Alright, so resistance, same area identified, I think it was on Monday, and support potentially where this lower high formed around 1738 should price move immediately lower. But if it starts creating, like I said, some sort of a zigzag behavior, maybe some sort of different, more complex pattern, we'll be tracking that over the weeks to come and see if we can identify potential area for a reversal. Okay. Right, and that finally brings me to the dollar index. Whoops, not on the white chart. I still have to draw that. Been saying for a while, and when I think we were talking around looking at the dollar index. Sorry guys, I'm talking a lot of crap here. I'm just forgetting my chain of thought here. In June, I think it was, or end of July, we were talking about this potential area, 114.46, 116 to the upside, where crude oil, the dollar index might be moving in and find resistance, which is just an upper median line, similar to what I've done on crude oil. I've had these channels on my chart for quite some time. Again, on the weekly, price moved right into it, and we had a strong reaction to the downside. Price sort of mucked around at this upper dash median line for a while and declined again. We had a support zone at 106.54, 107.53. So it's just give or take where I thought, could see that there was another confluence of market geometry levels. I was saying that this might act as strong support, and obviously last week, again, this is on a weekly time frame, the dollar index closed below there and has since reached again one of these areas where, like I mentioned before, you have these median lines, you draw a ray at the same angle, and if you see price undershoot or overshoot one of these lines, you just look at a previous point where there was an excursion below one of these lines that found support in this case and moved higher, projected to the upside. So this for me really is the final sort of area where the dollar index would need to find support. If that breaks, let's go dismantle that snap mode again. 105.58. See, it's already bouncing back to the upside, but might not just be testing this area of confluence. So again, we might not see the dollar index move much lower today. If it does, and like I said, when it's going to happen this week or next week, we see it close below this level, then I'm going to say that the dollar index is in for a much deeper decline. All right, so that's all I got for you guys today. It's the end of the week. Hopefully enjoy these sessions. Thank you very much for attending. But before I go, if there are any questions, let me know. If not, then I'm going to call it a day and make my way home. It's getting a little bit late here in the afternoon already. But obviously always nice being with you guys. Alright, doesn't look like there's any questions coming in. Guys, have a fantastic, or I would say ladies and gents, have a fantastic rest of your Fridays. And a great weekend. And then I'll catch up back with you guys again on Monday, same time. Until next time, take care and all the best. Goodbye.